Hi trader. In today's video I want to share a simple yet very profitable strategy. With you guys do not understand the strategy because of its simplicity. By mastering this strategy, you won't need the other ones anymore. I will go through everything step by step and try to teach you each and every detail. So be sure to watch the whole video. First of all, open the TradingView.com website and then select the US 30 index. Next, I'll set my time to the 15-minute time frame for this strategy. But keep in mind that you can use this method on all time frames, and this strategy can be profitable on all of them. These three lines are just regular moving averages. The only difference between these moving averages is how they are set up with various settings. If you use only one moving average line, you will see a lot of fake breakouts. Most traders find it confusing, especially beginners. These moving averages act as a channel or zone holding the price within the channel. It reduces false breakouts and allows you to enter trades after the price breaks through channels. I tested this strategy 50 times. You can gain 60% of your account balance in just 30 days. In other words, if you have $1,000 in your account, you can make at least $600 using just one currency pair. The best part of this strategy is you have to risk only 2% per trade. This strategy is based on the trend, price action, and current momentum. Three different moving averages work as dynamic support and resistance zones. I will explain this in the video. I will keep things as simple as possible with no complex indicators or tools. So it is very easy to understand and apply. It will also is easy to find very profitable trades in a couple of hours. This strategy works very well on the lower time frames like 1 minute and 5 minutes. If you are new to scalping trading and still learning about trading, so this simple strategy is a good place to start trading, because you will take the decision very quickly and hit buy and sell without thinking about fancy indicators. Now it's time to add indicators to our chart. Go to the indicators menu and search EMA. Apply the exponential moving average to. You can click 3 times to get 3 EMA indicator. Now let's make some setting for our EMA indicator. For the first EMA, change the length to 35. Choose white color and thickness as you like to see. For the second EMA, change the length to 35. Change the sour to high. Choose red color and thickness as you like to see. For the third EMA, change the length to 35. Change the sour to low. Choose green color and thickness as you like to see. Now our first setup is ready. As I already mentioned earlier in the video, we will use these three moving averages as dynamic support and resistance zones. Traders usually draw traditional horizontal support and resistance lines. But the price does not exactly react to support and resistance lines. So if you draw a zone on market prices high and low, it's more accurate. The top and bottom moving averages create excellent support and resistance zones in the chart. It is more accurate than using a single moving average line like traditional support and resistance zones. This will save us from false breakouts. This indicator also can apply for everyone who do not have a laptop or PC. By just a cell phone you can use this strategy to make money. Let's get started with the strategy. For the sell trade, before make a trade, please confirm these criteria are met. The first rule is that the price should cross the moving average zone from above to below. This indicates that the current trend is about to change from bullish to bearish. However, this does not exactly confirm the reversal movement. Price may come back to the previous trend. When a large move like this takes place, the price retraces to a higher level 90% of the time. And the second rule is the market price should hold in the moving average zone. Sometimes the zone will hold the price perfectly like this. But many times you will see that the market price crosses upwards and then quickly returns back to the zone. Or sometimes a bullish candle closes above the zone and the next candle immediately goes to the zone. These scenarios are valid with our second rule. Our main target is the price hold inside the moving average zone. You need to have a basic knowledge of candlestick patterns to identify the high momentum candles. The main idea is to find a cross down. with good momentum, so we can identify the momentum that just started and the market will continue in that direction. You can enter the trade here. Set your stop loss above the swing high or above all three moving averages. The first profit target is 1:1. And the second profit target is 1:2. When the first target of profit is hit, you can move up the stop loss break even. And wait for the price to reach the profit target. You can re-enter the market when you get another pullback in the direction of the trend. But I would recommend you to do only 3 trades in the direction of a single trend and keep low the profit targets. Low in the second and third trades. For the sell trade, buy trade are completely opposite. First of all, the price should cross above the moving averages, leaving a gap between the market price and the moving average. The second rule is the price should retrace inside the moving average zone. I explained 3 scenarios that can happen at this moment. First one, the price moves down and goes up immediately, leaving a candlestick shadow. Second, the price is close below the moving average, but the very next candle rejects the price and moves up, printing a bullish candle on the chart. The third one, the price perfectly holds the moving average zone and does not cross the lower moving average line. The third rule is that the price must cross above the higher moving average with momentum and should close above it. I place the buy trade here. Now stop loss above the lower moving average line or swing low of the retracement. Now I'm going to test this strategy on this chart. 100 trades and I will calculate the accuracy and gain of this strategy. Okay, the results are in after 30 days. Test is truly amazing, so let's check it out. That's great, right? And it took 1 month of price data to find the 100 trade signals, which is actually very good. There were 65 winners and 35 losses. The win rate is 65%. This is a really good win rate because our risk-reward ratio is 1:1 and 1:2. The gain on the account was 85%. And that's risking 2% per trade. That means if you had a $1,000 account, you can gain at least $850 profit using only one currency pair. The good thing about this strategy is that you only have to risk 2% on each trade. It is still very profitable. If you put in 20 trades, at least 13 trades will be profitable with a 1 to 1.5 risk-reward ratios. Don't risk more than 2% per trade. You can use more than one currency pair and you can gain more money with this strategy. We can eliminate all fake signals using the methods that I'm going to introduce later on this video. Now let me teach you how to filter fake signals. Open the tab on the search bar, type swing arm ATR. Now this is how the indicator looks, and it contains some signal in its own line. To make the most of the indicator, we must open the settings of the indicator and change some things up, so that the indicator can become more optimized and efficient for our strategy. First, in this style tab, we uncheck the sum option. Next, we move to the input section, and from there we change the ATR period to 200 and the ATR factor to 8. Click OK, and now indicator is ready. Let me explain how we will be using the indicator in the EMA strategy. The way we use it is that whenever the black flag indicator is green line, it means that we're currently at an uptrend movement and we're allowed to enter only buy trades. And if the indicator red line, it tells us that we are as a downtrend movement and we should enter only sell trades. Let's see, the indicator has worked with the first one. Here we got a bearish or sell signal. Here the bearish candlestick pattern is created by touching the moving average. Let's execute the trade and set the stop loss above the moving average. So we can see that our stop loss has been hit on this trade. I kept the second indicator hidden. You can see now the second indicator is green color. This means the market is an uptrend, which allowed us to execute trades of buy only. So the trade we just made was a wrong trade. One more example. Now you can see we have got a perfect buy signal here. So we have made a loss on this trade also. Now let's look at the second indicator. It's red. So this was a fake signal on which we just executed the trade. You can filter out those fake signals easily using this indicator now that we've completely learned this strategy. I want to test it on the US 30 index chart with a 5-minute time frame. And I want to see how much profit we could have made in these trades using the strategy. Now let's see how much profits are made with just these 50 trades. In only 50 trades in the US 30 index chart, we achieved nearly 350% profit, and this much profit in such few trades is truly amazing. And one very important thing. When you use this indicator on 1-minute or 5-minute time frame, then your stop loss will be very small. And here is result we test on NAS 100 for 50 trades. That's great, right? Of course some trade lossy, but not much. Trader, please remember to manage your money. And I hope you can win most of trade. Let us know in the comments what you think about this video. If you have some good ideas on how to use it in a different way, please feel free share them with us. Finally, please like, subscribe and click this bell to see newest video. Thank you so much.